The shocking truth: how celebrities are using life insurance to protect their valuable assets. By Kennedy Bosco. Published by Bosco Services LLC. Disclaimer: this audiobook ebook and its contents are the property of Bosco Services LLC. All rights reserved. No part of this publication may be reproduced, distributed, or transmitted in any form or by any means, including photocopying, recording, or other electronic or mechanical methods, without the prior written permission of the publisher, except in the case of brief quotations embodied in critical reviews and certain other non-commercial uses permitted by copyright law. Unauthorized reproduction or distribution of this publication or any portion thereof may result in severe civil and criminal penalties, and will be prosecuted to the maximum extent possible under the law. This audiobook ebook is for informational purposes only and should not be considered legal, financial, or professional advice. While the author and publisher have made every effort to provide accurate information, they cannot guarantee the completeness or accuracy of the information provided herein. Any action taken based on the contents of this audiobook ebook is strictly at the reader's own risk. The author and publisher disclaim any liability or responsibility for any errors or omissions in the content of this audiobook ebook. By accessing, listening to, or reading this audiobook ebook, you agree to indemnify and hold harmless the author and publisher, their affiliates, partners, and employees from and against any and all claims, damages, losses, liabilities, costs, and expenses arising from your use of the information contained herein, or any breach by you of this agreement. Please consult with a qualified professional before making any financial, legal, or other important decisions based on the content of this audiobook ebook. This book is sponsored by LifeHealthGuardian Agency, where we help you become not only a successful life insurance agent but also assist in building your downline for your company. When you join our organization, we help build your downline quickly and efficiently online by leveraging the power of the internet and digital tools to attract and engage potential recruits. Here are some steps we will use to help you achieve this. Build an online presence, create valuable content, engage in email marketing, utilize online advertising, leverage webinars and live events, optimize for search engines, network online. Use automation tools, and provide support and training. To join our organization, you must already have your life insurance license, not be a captive life insurance agent, or already be part of someone else's WFG team. However, you may still be eligible if you have been inactive for a specific period, so consult their policies or support team for accurate information. Email us at joinus@lifehealthguardian.com with your name and phone number so one of our representatives can get in contact with you as soon as possible. Greetings and welcome to this audiobook ebook on life insurance. We are agents of LifeHealthGuardian Agency, and we are thrilled to have you here with us today as we explore the world of financial strategies for three types of life insurance: indexed universal life insurance, whole life insurance, and term life insurance. Remember, there are many types of insurance, such as variable life insurance, variable universal life insurance, final expense life insurance, guaranteed issue life insurance, group life insurance, and survivorship life insurance. But for now, we'll focus on the three mentioned. Stay tuned for other ebooks and audiobooks that will discuss these other types of insurances and strategies for their use. Let us begin by taking a closer look at how celebrities are utilizing different types of life insurance. For instance, actress and entrepreneur Jennifer Love Hewitt has reportedly taken out an IUL insurance policy to safeguard her valuable vocal cords, which are crucial to her career. Similarly, comedian and actor Eddie Murphy has taken out a multi-million-dollar whole life insurance policy on his own life to leave a lasting legacy for his children and grandchildren. Meanwhile, country music star Luke Bryan has opted for a term life insurance policy to protect his family in the event of any unforeseen circumstances. As we delve deeper into life insurance, it is essential to understand the modified endowment contract and how it can affect your policy. A MEC is a life insurance policy that has been funded too quickly, which means it no longer qualifies for tax-deferred status. Avoiding a MEC is essential so that it doesn't become a taxable event. Once upon a time, there was a young man named Jack who had just started working and wanted to invest in a life insurance policy. He was approached by an insurance agent who convinced him to sign up for a whole life insurance policy with the promise of tax-deferred growth. Excited by the prospect of saving on taxes, Jack eagerly funded his policy with large premium payments, hoping to see his cash value grow quickly. However, he didn't realize that he was unknowingly creating a modified endowment contract by funding his policy too quickly. A few years later, Jack received a notice from the IRS stating that his life insurance policy had been classified as a MEC, which meant that he would be taxed on the cash value growth he had accumulated thus far. Jack was devastated, as he had been counting on the tax-free growth promised to him by the insurance agent. Feeling betrayed, Jack reached out to his financial advisor for help. Together, they worked out a plan to avoid any further taxable events by adjusting Jack's premium payments and structuring his policy differently. In the end, Jack learned a valuable lesson about the importance of understanding the details of a financial product before investing in it. Another critical feature of many life insurance policies is the ability to take out a loan against the cash value of the policy. Doing so can help to boost cash value accumulation and compound appreciation, as well as offering policyholders an alternative source of financing for various financial needs. Once upon a time, there was a young couple who had just bought their first home. They were thrilled with their new investment but soon found themselves in need of some extra funds to pay for unexpected repairs. They remembered that they had taken out a whole life insurance policy a few years earlier and decided to explore the option of taking out a loan against the cash value of their policy. After speaking with their insurance agent and learning about the process, they were able to take out a loan and use the funds to pay for the repairs. Not only did this option provide them with much-needed financial assistance, but it also helped to boost the cash value accumulation and compound appreciation of their policy. This experience taught the couple the importance of considering all the features and benefits of their life insurance policy and how it could help them in times of need. As we move on to more advanced playbook strategies, indexed universal life insurance is an option that allows policyholders to invest their premium payments in a variety of investment options, such as mutual funds or index funds, which can grow tax-deferred. This feature provides policyholders with the potential to earn higher returns than traditional whole life insurance policies. Imagine a farmer who plants seeds in his field. Some years, the harvest is abundant, and other years it is meager. However, the farmer is always hopeful and keeps planting each year. Similarly, an IUL policyholder invests their premium payments in a variety of investment options, such as mutual funds or index funds, with the hope of a higher return on investment. Even in years where the market performs poorly, the policyholder is protected from market losses, thanks to the downside protection offered by IUL policies. Whole life insurance is a popular option for those seeking lifelong coverage and an investment opportunity with a guaranteed rate of return. Integrating whole life insurance into a comprehensive financial plan or as a form of estate planning can yield significant benefits for policyholders and their heirs. For instance, consider the story of a client named Mr. Jones. As a successful businessman, he had amassed considerable wealth throughout his life. Nevertheless, he was concerned about estate taxes and wanted to ensure his family's well-being after his passing. An insurance agent assisted him in establishing a whole life insurance policy designed to optimize the death benefit for his heirs while minimizing estate taxes. The policy also granted him access to tax-deferred growth through policy loans or withdrawals, supplementing his retirement income. Whitney Houston, the renowned singer and actress, serves as an example of a celebrity who utilized whole life insurance. Prior to her untimely death in 2012, Houston secured a $20 million whole life insurance policy intended to provide financial security for her daughter, Bobby Christina Brown. Following Houston's passing, her estate received the death benefit from the insurance policy, aiding in the coverage of debts and other expenses. Various media outlets, including Forbes and The Hollywood Reporter, reported on Whitney Houston's whole life insurance policy. Finally, term life insurance provides coverage for a specified period, and it is crucial to assess factors such as debts, income, and expenses when determining the appropriate coverage amount. Comparing rates and policies from different insurance companies and regularly reviewing coverage to ensure it still aligns with needs is essential. The late Australian actor, Heath Ledger, serves as an example of the importance of term life insurance. Ledger had a $10 million policy in place before his untimely death in 2008, which was intended to provide financial security for his daughter, Matilda. Ledger's father, Kim Ledger, discussed the insurance policy in an interview with the Australian newspaper, The Sunday Times. To further illustrate the importance of term life insurance, consider the following parable. Imagine a family with young children who depend on their father's income. One day, the father unexpectedly passes away, leaving the family without a source of income. Fortunately, the father had taken out a term life insurance policy, which provided the family with financial protection during their time of need. Assessing factors such as debts, income, and expenses is essential when determining the appropriate coverage amount for a term life insurance policy. Additionally, regularly reviewing coverage to ensure it still aligns with needs is critical. In conclusion, choosing the right type of life insurance and utilizing the tactics and financial strategies that best fit individual needs and goals can provide valuable protection and financial security. Don't hesitate to consult with a financial advisor or insurance agent to help determine which type of insurance is right for you and how to maximize its benefits. Thank you for your interest in this topic, and we hope this audiobook or ebook has been a valuable resource for you. Remember to make sure you are adequately covered and prepared for any situation. Thank you again, and we wish you all the best in your insurance journey. The shocking truth: how celebrities are using life insurance to protect their valuable assets.